Good afternoon, traders. This is Michael James with Uncharted Profits Daily. I've got another fantastic bearish continuation setup for you today, this time on Newmont Corporation, symbol NEM. The stock closed below its minor bullish trend, which you can find by tracing NEM's recent trend line, starting at support down here at the recent low from May 31st, counting 1, 2, 3, 4, 5, 6 candlesticks long. Connect the lows as best you can. And of course, you can see here that Newmont did in fact close below that trend line. But before we get into the specifics as to why this is such a nice bearish trade setup, let's take a look at something else that's going on with the broader market to see why bear setups continue to make sense here. Okay, so this is the iShares 20-year plus Treasury Bond ETF, symbol TLT in blue. And then in orange is the SPY ETF, or the S&P 500 ETF by comparison. You can see here that over the last few months, really over the last few years, the TLT ETF and the SPY, the S&P, have pretty much moved in tandem. Sure, there were some gaps, but in general, even with the gaps, they both moved in the same direction. And when you had disconnects between the two, that often would presage a move for the S&P. So you can see right here what's going on now is something that's a bit unique. TLT has sold off significantly. You could argue in response to the debt ceiling crisis or looming debt ceiling fears that the U.S. would default on its debts. And TLT ran lower. But during that time, the S&P ran higher. When these disconnects form, these eventually come back to meet each other. Either bonds will rally or the SPY, or S&P in this case, will sell off. But in general, over the last few years, it has not been bonds or treasuries here that have followed the S&P. It is the S&P that has ran down to meet treasuries wherever they are, or ran up to meet treasuries if there was a disconnect and treasuries had rallied. So really, this is showing us another signal that treasuries could be leading the SPY lower, or the SPY is about to fall here to meet treasuries finally after this disconnect, and this gap between the two has become very large. And now one more thing before we get into the specific NEM trade setup. I did want to remind you that the methodology we'll be using and talking about here when looking at this setup is the exact same trading methodology that I use to make Uncharted Profits Daily alert picks every night after the market closes, which we send to our members to their email inbox. To sign up for those alerts and also receive them, all you have to do is go to unchartedprofits.com/alerts and then click on this button down here, fill out all this information, first name, email, phone number, and click Get Free Alerts Now. And the next one that comes out will come straight to your inbox. Okay, so back to NEM. So this stock, like we said, closed below this minor bullish trend, which was really just a failed breakout, a dead cat bounce, in which NEM also set a lower high along this line here relative to the recent high back here on May 4th. So that's a big lower high, and NEM really ran lower. What I like to see is a big move before I consider any bearish continuation. In this case, we definitely had that move. NEM plummeted from this high here to the low about 20%. That's a big move, especially for a stock like NEM. But in addition to closing below this trend line, it also closed below the 10-day moving average, the purple line running up and down the chart right here, which I also love to see. And it closed below the longer-term moving average, the 20, this orange line running down, which is also pointing lower, which is a big deal, especially when looking at bearish continuations. Finally, the stochastic indicator at the bottom of the chart is reading at 62.29. I like to see readings above 40 when considering bearish setups, especially with support lingering nearby, right around here at 40 bucks even. Along this line, we'll make green, make it a bit more obvious. Because the reason for that is that when the stock heads lower in a bearish continuation, it needs enough power to punch through support. And if the stochastic indicator is too high, oftentimes it will fail and reverse. And bears do not want to see that, especially when you could arguably have a double bottom here, a very small double bottom, preceding what could be a rally higher if it fails at support. But because the stochastic indicator is so elevated at 62.29 that gives us enough ammunition to potentially run through here and blast through support. So that's why it might make sense to take a bearish trade on this stock should it take out today's low and continue falling. And so if you liked what you saw here and you'd like to get my Uncharted Profits Daily alert sent to your email along with specific entry price recommendations, just go to unchartedprofits.com/alerts. Right here, click this button, hand-delivered free daily trade alerts. Fill out this information and click Get Free Alerts Now, and you'll have the next alert waiting for you in your inbox. I send these out every day the markets are open with my #1 trade alert for the day. Thanks again for watching, traders. Good trading.